All right, guys, welcome back to the Bitcoin Fellowship, our show where we talk each week about medicine, Bitcoin, and the cost of staying asleep. This episode is a fun one that Chris and I brought you. It's episode 5, The Cutting Edge, where we got the chance to interview Dr. Benjamin Stong. He's an dual board certified ENT and facial plastic and reconstructive surgeon based out of Atlanta. We had a really fun discussion about his journey into medicine, his journey into Bitcoin, Bitcoin Treasury companies, specifically MetaPlanet and Strategy, how he evaluates those, and how he would get a chance to talk to former residents or himself in his earlier years and how he would invest in Bitcoin at this stage.
Yeah, it was a great discussion. I think you guys are really going to enjoy it. As always, this show is never financial advice. Consult a financial professional for any of your specific questions. Since we are doctors, this is never medical advice. Feel free to reach out to us on X if you have any questions or future show topics you want us to talk about. Otherwise, enjoy the episode.
All right, guys, welcome back to the Bitcoin Fellowship. We got episode 5 here, The Cutting Edge. We got Dr. Benjamin Stong, ENT, dual board certified in ENT, as well as facial plastics and reconstructive surgery based out of Atlanta. He's also just kind of come to the same conclusion as us that you can't just work harder in medicine, you have to work smarter. So we wanted to have him on and have him share his story. Ben, if you want to tell us a little bit about your background and why you got into medicine.
Yeah, actually, absolutely. Ben Stong here. My father was a physician, a military physician, and so I grew up in a family where there was, medicine all the time. When I went to med school, I thought I might want to do neurosurgery. I did some research in neurosurgery, did some rotations in neurosurgery, realized it wasn't for me. And I really had liked cranial nerve anatomy during med school. And then I went and hung out with the ENTs, watched laryngectomies, all these like really cool procedures, airway procedures. And then, gravitated towards the otolaryngology, head and neck surgery profession, just because there's so much diversity: ears versus plastics versus head and neck versus sinus rhinology, even voice disorder, blah, blah, blah. But I always gravitated towards the plastic side of it. And then ultimately, after I got into my ENT residency, I decided that plastics was for me. I felt like I saw the writing on the wall that physicians were going to be turned into mid-level, practitioners for giant hospital systems,
Right.
Salaried employees, and we weren't going to have much control over our own destinies. And that's a really terrifying thing to think about when you are a young person trying to figure out, how do I make my way in this world?
Definitely. It was all the time and money invested too. Like you're at the end of the education and like, where am I going to go? Yeah, I get that.
Oh, absolutely. Yeah. I mean, we so much opportunity cost, time. Time is probably our biggest thing that we spend becoming physicians, ultimately.
You lose all of your 20s basically.
20s and yeah, exactly. Early, and then on top of it, for me, I started to practice from scratch out of fellowship. I hung a shingle, I took out a bunch of debt, and built my plastics practice from nothing. I didn't have any family help. I didn't know anybody. I didn't have anybody to help me out from that position. And I built it through reconstruction initially. I went out there and visited every dermatology practice in Atlanta. Did tons and tons and tons of complex Mohs reconstruction initially, before I got busy with cosmetics. And then as cosmetics got busier, I ultimately gave up the reconstructive side of it.
Yeah.
Nice. If you mind me asking, between medical school, residency, and the 2 fellowships, how many years did you put in for training?
14.
Wow.
You said college too?
Or I guess medical. Oh yeah. People often don't take that into account, right? There's college.
So 10 not including college, 14 including college. Yeah, it's a long time. And then on top of it, starting a business out of, is really just, it's a whole different aspect that physicians, that we don't get any education on how to run a business at all.
I'm sure those first couple of years out when you were starting your own practice, you were probably even busier than you were in some of your residency and fellowship years, just trying to stir up business and put a name out for yourself.
Yeah, waiting on business to come in, right? Exactly.
Yeah. Or like you said, going to all those dermatology clinics and trying to drum up business just to get stuff going.
For sure. Absolutely.
I have an interesting question because my dad's also a physician, and I initially kind of rejected that path. I'm like, I don't really want to do that. I want to do anything else I can, and then I came full circle and ended up back in the fold, as it were.
Mhm.
Was there any of that with you between you and your dad, or like you saw what he did and you absolutely wanted to do it?
Oh, he absolutely told me don't go into medicine.
Really? Okay.
He said Ben, there are better ways to make money in life.
Yeah.
And initially, when I got in, I went to UAB for medical school, and UAB allows you to defer for a year if you
Okay.
want to from your acceptance. And I was like all gung ho to defer, and he told me, "Well, you better get a job and make some money." So I was like, "Well, I guess I'm going to medical school."
Yeah.
So I decided to go. But yeah, he told me, he was like, "Yeah, there's absolutely better ways to make a living in this world."
Yeah. I think my dad had a similar message, maybe not as direct, but it was definitely not about like going to make money. But I just didn't find anything else I really liked, and I could see myself spending my career doing that was fulfilling. But just curious question. That's very cool.
Yeah.
It's kind of funny. I feel like we all have that, when you have the med student with you or like the pre-med that's asking about, and they're just asking about like salary. They don't think about like all the time it takes to get there. And I think us all try and have that conversation with them. Like, you don't understand the opportunity cost that gets there and like what you have to sacrifice. Like, there's definitely easier ways to make money. This is why
100%.
the podcast exists, right?
Yeah.
Well, and particularly given the fact that like Bitcoin is now available, right? Like when I was, when I was going through all this, like Bitcoin wasn't a thing. It was after the fact. I think you guys are quite a bit younger than me, so when you're going through, like, it's like it's a opportunity cost between deciding, okay, do I want to like start earlier investing in Bitcoin, or do I want to like go through all this educational aspect of things to be able to try, like, and then start buying at some point in the future in the term point.
You hit the nail on the head there. The whole reason that we named it the Bitcoin Fellowship was Chris and I were 2 years out now and attending, but our last year of anesthesia residency, we were both talking to each other. We trained together, and we're like, well, what's the opportunity cost and the actual true value of a fellowship year? Because it's not just like that foregone salary. It's the fact that you can't put that extra attending money you would have otherwise had into Bitcoin. And one of the earlier podcasts, we kind of did some of the math, but it's already like a 4 or 5x from what it was 2 or 3 years ago when we were doing that math. And so, and that's just for a 1 year fellowship. Some of these fellowships are 3-4 years in length.
Mm-hmm.
So that's a whole Bitcoin cycle.
Yeah,
right.
You can miss a lot.
Yeah,
you can miss a lot. It seems like day to day, it's like it's almost hard to keep up with everything going on every day of the week.
Oh yeah, it's very hard.
It's like compared to a year or two ago, a week's worth of like information feels like a year was 2 years ago. Right. Like there's just so much stuff. Chris and I were talking about that before we jumped on. It's like, did I miss anything? Did you miss anything this week? Like just trying to catch up and keep up to date with all the treasury companies and between Strategy's earning call and some of the podcasts.
Yeah, everyone had big announcements this week. Well, the crypto summit, whatever from Washington wasn't that big, but MetaPlanet had big announcements this week. Strategy had their earnings. Like everything's going on.
Yeah, pretty incredible stuff going on. And what moves the price is a very different function, right? Like it's sort of interesting to see what actually moves price, right? Like earnings were nothing for MSTR, and MTPLF was is getting beat up right now. It's crazy. Despite the fact that they announced the preferreds.
Yeah, which that will be huge too. So
for sure, yes.
So Ben, when did you first hear about Bitcoin? Like, what was your first exposure to it? Were you like us and like traded it in and out of it, or were you like you heard the orange pill and you're like, I'm in? Where do I sign?
Yeah, so no, I actually got into everything through altcoins. I started I think the first time I bought anything at all was when Elon Musk was on Saturday Night Live and Dogecoin went up 45% overnight or something ridiculous like that. And then I think the next day I was like, oh, I got to buy this Dogecoin. I got to buy 5,000. So I bought $5,000 worth of Doge, and then like proceeded to watch it like shrivel away also. And then I like really got into Cardano for a while. I thought Charles Hoskinson's like brilliant, like mathematician. They're doing like all this peer reviewed like stuff. And like, This was going to be the future. At one point, it was at $3 a share when I owned it, up 300%. I didn't sell it, which was a mistake, I guess, at the time. Then I started buying Ethereum. I bought, Cosmos. I mean, I bought every single DeFi altcoin you can imagine. It was fairly popular at the time.
Yeah.
And that was in Voyager, right? So, and then I actually was saving a ton of my business revenue for taxes, for retirement accounts, all these different things that I had, obligations I had on Voyager in USDC because it paid 10% interest. And then I got literally $800,000 worth of cash locked up on Voyager when they declared bankruptcy. So I was scrambling thereafter to try and I fulfilled my obligations, but it was a crazy time for me. Still is a little bit. I still have a good chunk of money that I think we'll get back, or a large portion of it. But I had $4,000 worth of Bitcoin in there. It was almost nothing.
Yeah.
And then after all that happened, I had decided I had decided that Bitcoin was the best option, and I had some Roth money that I had put in, a large amount of Roth money, actually, not just the $7,000 a year. I did a big backdoor Roth actually out of my business. And so I was buying a ton of Bitcoin because I was like, this is the only thing worth buying any longer. But I was buying it on the way up to 69,000. And then it got 69,000, and I'd almost put most of it in, and then it crashed back down over a few months period, almost to 16,000. And I still had those other alts in that I Trust Capital account. But ultimately, when it was down to 16,000, I just converted everything over to Bitcoin, ate my losses, and was like, "Screw it! I gotta start from scratch as best I can."
I'm sure that was a very.
Go ahead, Chris.
Go ahead, Adam.
Go ahead. I'll follow up.
I'll say that I'm sure that was a very tough decision, but in hindsight, that ended up being a good rotation into Bitcoin at that point.
Absolutely, a good rotation. Actually, the Ethereum to Bitcoin ratio is much higher at that point than it is today. So I guess even all the alts were more valued at that point than they are today. So if you want to look at that ratio for rotation,
all other shit coins go to zero against Bitcoin.
Yeah, right? Everything goes.
Everything trends to zero against Bitcoin. Absolutely. And I think a lot of us who have been in now for a cycle or two, you have to almost go through that drawdown to build your conviction, right? Mm-hmm. And then you start to realize the true value. And then when it hits the 16,000, 20,000, that's when you're like, okay, how do I find all the change under the cushions so that I can buy more?
Yeah, what's that level now? 84,000, as Josh Mandel says. 84,000. We're going back to after we go to 444.
Yeah, I don't know. Yeah. Well, we forgot to do the prices. I think the price is at 114,400 a day, right? And it's people are bearish right now.
Yeah, and it's 114.4.
Yeah, see, nailed it. Didn't even look at it. Back of the brain.
No.
Yeah, I can just feel it. But it's just wild, the sentiment of that. And a couple of years from now, that's 114. People will look back and it'll be the 16 of the cycle. Where we're sitting at 500 to $1 million. So just time's on your side.
Exactly.
I got to ask you this, because I saw on your website, and I think I had briefly talked to you about how you accept Bitcoin as payment for some cosmetic work. Have you had anybody take it?
So interestingly enough, it was a big decision for me, because I was like, okay, I really want to start, collecting Bitcoin, getting, paid in Bitcoin somehow. And after talking with my accountants and et cetera, it just made sense to be able to accept Bitcoin as payment. In fact, from a tax perspective, if I get paid in Bitcoin, for instance, right, you pay tax. The business pays tax on the spot price at the time you accept it.
Okay.
And then it stays in the business. And then if you want to bonus yourself in 4 years, 5 years, 10 years, whatever that looks like, the bonus to yourself is taxed at the initial spot acceptance price.
That sets your cost basis basically, right?
Yeah, exactly.
Yeah.
The cost base, right? So exactly the cost basis. And so, I mean, that's a very attractive way of looking at your reserves, whatever you want to look
Yeah.
at. Have so no, I have not had any. But this has only happened in like end of June when I put that up on my website.
Okay, so fairly
And
recently.
very, very recently.
Yeah.
And no, we have not had a payment. But the other day we had a person called the clinic, and he was like, "I just want to confirm you guys take Bitcoin for payment." And staff was like, "Absolutely." Dr. Stong's a big Bitcoiner, and he's like, "Okay, like I'm gonna have my wife call back. She's gonna book an appointment with, a consultation with you."
Okay, very cool.
So I don't know if that actually like came to fruition or not, but
Yeah.
never really would know because you would just call and book a consultation. But it's inevitable that this is how it's going to go, and
Right.
I'll accept it'll be more and more common to be paid in Bitcoin.
Do you offer any kind of discount to pay in Bitcoin? I know some companies do that to try to incentivize people to pay
Well,
that
funny
way.
you say that. We actually charge the 1% fee that I
Okay.
would charge. We charge credit card fees. Yeah, I'm
Yeah.
over all the processing fees everybody charges. But yeah, if you want to send it cold, I don't own any cold storage. But if you want to send it to me in cold storage, I will set that up and get it sent over to me in cold storage, so there's no fees.
Gotcha.
I think that obviously like adoption's very early and we're still very early, which is what I tell everybody who thinks that they've missed out because the price is 114,000. Like I missed everything. Like it's too expensive now. And I try to explain where this is going long term and how this is still very cheap and very early. I think you're testament to the fact that like nobody, like you said, happened in June. So you haven't really had a lot of patience to be able to do it yet. But the average person on the street is not most people don't know what Bitcoin is, and B, they're not going to have like Bitcoin ready for payment. But I think you probably, to my guess, are not going to get the people who actually get it probably aren't going to be spending it. They're probably going to be wanting to spend in cash. The whole Gresham's law, bad money drives out the good.
Yeah, I've thought a little bit about this, I guess, over time, and I think probably that person that called my office, maybe he has 1,000, 2,000 Bitcoin like in his like hard wallet that like he's like, how the hell do I spend this? And my wife wants a facelift or something, and he's like, shoot, I'll absolutely pay for the facelift with Bitcoin, or alternatively. People who inherit it that don't really know or understand anything about it, like, okay, let's like figure out how to spend this. But you all of us know that ultimately, if you're on a Bitcoin standard, then the only option is to pay in Bitcoin.
Right.
But that's not happening anytime soon, for sure. I think we all know that. But like ultimately, I think the testament to being on a Bitcoin standard is when no business takes anything but Bitcoin. They're not willing to accept fiat any longer.
Yeah, I think we're marching closer and closer to that the more they print.
For sure.
So you also mentioned that you don't own any cold storage Bitcoin. So if you mind me asking, like, is that how you got into iTrust Capital, mostly through like your retirement accounts first and through the, having to convert some of the altcoins? Like, what do you hold now? What's your Bitcoin portfolio ultimately look like?
Yes. So, okay. So my journey started not just with like the crypto alts, but like also just studying assets in general and investing in money and economics and et cetera. And I came across an article years and years ago on the Wall Street Journal about Peter Thiel. And what the headline to the article was, Peter Thiel has $5 billion in a Roth. And I was like, well, As far as I know, we can only put $7,000 in a year. And how do you get $5 billion in a Roth? And then I read the article, and it was like, oh, when he was starting out in PayPal, he was putting it in the Roth in penny as a penny stock, right? So penny per share, or whatever that looked like, and then it all of a sudden over years it rises to $458 a share. And he has $5 billion, whatever that number looked like. And I was like, oh, that's the way to do it, to find an asset that can actually like go up, fast enough, high enough, to get Roth money meaningful.
Yeah.
And so I, like I said, like I'm probably at least 10 years older than you guys. I wanted to finish my retirement accounts early. So with my business, I also had read about defined benefit plans. I don't know if you're familiar with them or not. They're basically pension plans for a business, and so I opened that up, and you can put a lot of money in very quickly into a defined benefit plan.
Right.
So I put that cash in, and it's tax deductible also, by the way.
Oh, nice.
And then I did a big Roth conversion out of that. I have a giant tax bill coming from that, but I wanted to get as much money into Roth as I could right away.
Yeah.
And so that's ultimately how I came to deciding, okay, I bought Bitcoin, and then I bought MSTR. Like I converted all that into MSTR in the defined benefit plan, and then ultimately I made a big giant Roth conversion, and that's sort of how I basically all of my portfolio is 100% Bitcoin and 100% retirement accounts. Maybe let's call it 95% retirement account.
Right.
That's awesome. That's kind of the way Chris and I were having a conversation about this the other day. And, you kind of run into these people that are like the hardcore Bitcoin maxis that look at you if you don't have just pure 100% Bitcoin, and the vast majority of your portfolio is Bitcoin. But I think the more like realistic play is that most of the people are going to get into Bitcoin through their retirement accounts first, like you talked about. And the vast majority of them aren't going to hold cold storage Bitcoin to figure out, how to hold a hardware wallet and how you get it transferred and to feel safe about that. You're just not going to have the average person able to do that. They're going to be buying the ETFs or the Bitcoin Treasury companies like Strategy and MetaPlanet, and that's going to be the more common route.
Yeah.
Which just makes sense. I mean, from a like a ease perspective, I wouldn't trust myself to memorize like a giant seed phrase and keep it stored for forever. And then if I died, for somehow that to get to somebody that could meaningfully get into it,
Right.
it would be a little nerve wracking. I would think.
I think in-kind redemptions change that dynamic too, because you can still easily onboard on the ETF, and then if your heir or whoever you pass it down to wants the cold storage Bitcoin, they can presumably eventually get it out pretty easily.
They haven't made that change though yet, have they?
They made announcements, but I don't think it's not official
Right.
yet. But
Okay.
it's been talked about a lot more in the last couple of weeks.
Right. Exactly.
You don't want to just pass along the treasure map to your wife or kids, that has where the Bitcoin's buried out back.
Right. Or like, a giant Bitcoin treasure hunt, around the world or something like that.
Yeah.
Big giant clues.
Yeah. Some people do that, and it takes a lot of faith to do that, and you have to really know who you're passing that map to.
Yeah. It sounds risky for sure.
Yeah, I think that can work for some people, but I think the institutional onboarding through your retirement and all your brokerage accounts is a lot smoother way, like you said.
Well,
It's gonna make sense for a lot more people.
So after getting all this MSTR into Roth, then I went and I've been studying for the past 8 months how to trade these Delta 10 covered calls.
Yeah.
And man, it's like printing money.
Yeah.
In a Roth, you can get that much, per month into that account, and invest it as it makes sense for you. It's really a pretty interesting dynamic when you think about it. Very powerful dynamic.
So you're doing that just to keep growing your Roth? Is that what you said?
Absolutely.
Yeah.
Yeah, I have a lot of contracts in my Roth, my pre-tax, everything. I trade these things. I've just started doing it. Hermes, Lux, So that's sort of how. And then Josh Mandel, watching him trade options, but I'm nowhere near trying to do what he did or has been doing.
Yeah.
But just trading it. I just started last month, but I spent about 8 months just learning about options and the lingo,
cool.
and so I wasn't just completely caught off guard.
Right.
I think that's the really cool thing about this space, right? Is like most of us as physicians don't have that economic or finance background, and most of us do not know how to invest. But the space is still so small that it's easy to get access to that information asymmetry and that alpha, and we educate each other, right? It's that idea of like, hey, I'm benefiting from this. Like you have to understand Bitcoin to get into the Bitcoin treasury companies like Strategy and MetaPlanet. And then another layer of that, it's kind of like what Punter Jeff says. It's like 1 in 100 get Bitcoin, 1 in 100 get MSTR, and then 1 in 100 of those guys understand how to sell covered calls on MSTR. But the whole idea is like we have such an opportunity cost to get here to this point. We want to take away all the financial constraints and concerns that we have. Like you're able to just focus on the patients and let that stuff work for you in the background, moving from more of a paycheck driven income to a portfolio driven income.
Yeah, I think sometimes one of the negative things that I did was I did it all in my like retirement accounts, or vast majority of it. So like I can't access it for at least another 10 years or so. So it's like, man, like I locked this money up, and I didn't think about locking money up like this. Like even the money, like the passive income that's coming in, I'm like, oh, I can't pull this out. Like I've got to just reinvest. I mean, cry me a river, so to speak.
You're
right?
stuck.
Like,
Yeah.
The tiniest violin, so to speak. Yeah, I was like, oh man, I just locked all this money up, so I can't get it out anytime soon.
Has your view changed on like the next few years? Like, do you think you're going to open a brokerage and like with the goal of working less, or stop doing your surgical work at all, or what do you think the future holds for you in that regard?
Yeah, no, I don't. I'm certainly not quit working. It's my best way of generating revenue and cash.
Right. Yeah.
I have a brokerage account that I've been now supplementing since I got done with the retirement accounts. But doing facelifts, doing rhinoplasties, doing eyelids, doing hair, all these different things that we do, it's a great way to generate cash to be able just to buy Bitcoin or Bitcoin related products. And then building it up post tax too. I think that's important. That's what most people do in life. Most people build up their assets post tax. I think I was like so fixated on tax advantage accounts that I forgot about actually like being able to use money.
Yeah, me and Adam had a similar experience. Like we compressed that all into like the first few years of our career, but we're loading up retirement. And you hear about all these people like, oh, I quit my job. I'm like living off this portfolio. I'm like, wait, how do you do that? Yeah, and like, oh, because they have a brokerage. Like they didn't just poured it all into retirement.
Oh, yeah, exactly, right, exactly. But you guys, like we only have a couple options in life, right? So we've got to use our skill set to like make money however we can.
For sure.
So, and you guys are young enough that I think it's absolutely worth your time, energy, and effort. Probably, and then also I think with MetaPlanet, we're going to be trading options on that in the not too distant future. Whoever knows how long that is, but that's going to be another source of revenue as well.
Mm-hmm.
Yeah, Chris and I are both in our like early to mid 30s, and so we realized very quickly, like even if we wanted to retire early, we didn't want to have to take into that account and take a big tax hit to open it early. So we're like, well, crap, we have to have something in a brokerage outside of we do have cold storage Bitcoin, that we don't want to tap into.
I would absolutely encourage you guys to look into defined benefit plans. If you haven't heard of it, I don't know how many people are in your group, but you can really like tap out your retirement accounts at like much higher numbers than what you're able to do right now.
Yeah, okay. I've heard the term. I've never done much research on it. But yeah, I'll definitely look into it.
Yeah, if you want a company that so I use an actuarial firm. You usually have to use actuarial firms for these types of things. If you want the actuarial firm that I use, they're out of Chicago. I can give you their information, and there's all this testing, and like it's not cheap to do it. Yeah. But I think short term, long term, it's very beneficial for you to be able to put that much money away into a retirement account at your age in particular.
Absolutely. Gotcha. I guess another question I have for you, I'm sure you're kind of a disciple of Saylor, having been owning Strategy for a while now, and having your own business. Have you looked at any of these like corporate type loans, stuff that you can do with a business outside of an individual just investor to try and accumulate either more Bitcoin Treasury shares or Bitcoin itself?
I guess as a business owner, can you take on more debt to do things? Yeah. No, I haven't like looked at any, like, I think I've used my HELOC that I have to like do that, how I want to do that. But yeah, no, they're not just giving you as a business owner some sort of line of credit to be able to go out there. Like the line of credit comes from against like your house or whatever that looks like. And yes, I've used HELOCs. I think that's advantageous for sure. But yeah, Sailor says anything below 10%, you're pretty good to go.
Yeah.
Yeah, I know there was a couple. He used the example of a dentist, and I think there's a couple dentists in the space that did the same type of thing against their business, and then they just basically got to the point where living off their Bitcoin and just practicing when they want to now, not so much having having
Yeah,
to.
I think how do you? It's interesting. So how do you turn that Bitcoin into income, right?
Right.
The only way I really know how to do it at this point is to trade, sell covered calls. How else are we getting like actual income, fiat coming in to be able to pay bills? I don't know that answer.
I think that's the interesting point about the preferreds, right? And that's like why the space is still so new. Is that that's been the longest problem for the longest time with people who imagine those OGs that have had Bitcoin since 2014 and watched it do 1,000x, and they can't tap into it. And now Sailor and pretty soon MetaPlanet will let you have those preferreds to where you can get that fixed income, 8 to 10%, like on a Stretch or a Strife type of product. I think that's what's going to really revolutionize the space, is because you can be a Bitcoiner and have that supplement your income.
Yeah, no doubt preferreds are the differentiator for every treasury company going forward. My personal opinion, look, I see particularly Chris post a lot about like this stuff too. And he's right. Like strategy is the big stack. If you want to look at it like from a poker perspective, MetaPlanet, when they do this, is going to be the next big stack. Although it's a much shorter stack.
Yeah.
They're doing it with a different flair. I actually was thinking about this today, and I'm still toying around with how to look at this valuation metric. But I've started thinking about a new valuation metric for treasury companies, right? And it takes into account debt.
Right.
I don't think debt from a valuation perspective has really been incorporated to the degree that it needs to when we're looking at the valuation of a treasury company. And then with these preferreds are going to MetaPlanet has decided we don't want debt for the most part. They're avoiding debt. And so how do we look at valuation? And it's no fault to Strategy versus MetaPlanet versus any other company out there. But I think if you look at Bitcoin efficiency purchasing, right, like that's like one of the biggest metrics that any of us want to look at. And that ultimately boils down to being Bitcoin yield per share, not just Bitcoin yield, but per share, right? Per share. And I think the best way to look at the valuation metric on these treasury companies is it's not just Bitcoin yield per share, but it's Bitcoin yield per share as a ratio or divided by Bitcoin rating. So NAV to debt ratio. Mm-hmm. You could also take the inverse of that. This is what I'm toying around with, debt to NAV ratio as the denominator in that scenario, and then look at that as a metric for how efficient to the debt that they're taking on are these companies actually like producing a Bitcoin yield per share.
Right.
And I think that's the new metric. It's not just Bitcoin yield. Like, okay, like our Bitcoin amount that we own went up, 20, 30%.
What did you do to get to that?
Debt,
what did you? Yeah.
How much debt did you take on to get to that point?
Right.
And that's where all the European companies, I think, fail. So I don't think the European treasury companies, and this is no offense to SWC or Blockchain Group or any of these companies, like, because I probably don't know enough about their debt that they're taking on. But it's my impression that the European companies are doing convertible notes primarily, and taking on a lot of debt. Whereas MetaPlanet is not taking on debt at this point as much, and they're using exclusively. Now they got the preferreds coming in initially, which is still debt, but it's a much lower. The arbitrage.
It's perpetual. Yeah, it's perpetual, so there's not technically it never comes due.
Exactly, it's perpetual, and it's and the ratio is much. Like the leverage is much higher. They get much more leverage out of that.
Right.
As far as I can tell. So I think, yield per share divided by Bitcoin rating, or the inverse of Bitcoin around within my head. Which way do you want to look at that number? Is going to be the best.
It's almost like a. Go ahead.
Oh, is going to be the best way to look at the value of these companies going forward?
Yes, I think what you're describing is like a risk-adjusted yield, basically, right? Like you can look at yield, but it's how much debt, how much capital you're putting at risk to achieve that. So I think that's a useful thing, and no one really has nailed down what that looks like. So definitely keep working on that. Be interested to.
Yeah, I think you nailed it on the head when you talked about getting rid of the convertible debt, right? Saylor's always the first mover in the space, and he just kind of blazes the trail for everybody else to follow. And there's a reason he's getting rid of all the convertible debt, is that he's realized that he doesn't want that to be top of the capital stack, right? He wants to be able to issue these preferreds at different levels on that and build out that yield curve and get rid of the convertible debt into equity. And then all of a sudden you have a huge credit rating on like the Strife and the Strike, right? It's higher in the capital stack. And you can start to issue some of these products like the Stretch and all the other stuff that's coming out. So now he's just got access to all these other capital markets. And I'm sure MetaPlanet's going to follow in his tracks and do the exact same thing.
Except I think MetaPlanet's going to do it more efficiently and better, right? I mean, I would 100% agree with anybody who says we can't catch Strategy. Like Strategy is like they are the big mover, but like if they can do it more efficiently, I do believe their stock price per share or their stock price can move faster over maybe the next 3 to 5 years, and then eventually they'll all fall in line behind Strategy. Everybody's going to be roughly at the same,
I like MetaPlanet. I fall in this niche of fighting not trolls, but very short time horizon people on X, because they just are so day to day with the strategy trade. I'm like zoom out, like look at how much they've done, look at how much they've actually grown, and like what your return is over time. But I've paid close attention to MetaPlanet. I have a small stack of that just in my, I don't remember which account. I think my brokerage account. But they're doing cool stuff, and I was surprised that they were doing the perpetual preferreds and not a shorter dated preferred, just being with the Japanese market. But it's gonna be interesting to see how it plays out.
Yeah, I mean, it seems like they're launching Strife and Strike.
Yeah, it does.
Yeah, right. That, and then they will get the STRC. I don't know about the junk bond one, STRD, but it seems like they're going to do all of it. And they'll do it. They'll have a better arbitrage, right? So I was thinking about that today. Their Strife, their long dated perpetual, non-convertible is going to be, closer to 6%, 5-6%, right? And then the Strike is going to be closer to 3-4% probably.
Yeah.
But it's not as big of a market as the U.S.
Yeah. But I think they're going to make a big splash with that. I think it'll be interesting to see the numbers that they're able to generate from. I'm assuming they have IPOs in Japan, right? Like they'll basically make an offering, take in a huge chunk of money at first, and then start trading. I don't know for sure.
Yeah, I don't know for sure either. And then that was the other point to what I was making earlier is like I don't think these European companies are going to be able to do preferred stocks anytime soon.
Okay.
Like MetaPlanet and Strife are going to MetaPlanet and Strategy are going to get into Europe probably sooner.
Yeah. I think Saylor's going to go after all the different capital markets. I think is the whole plan with these preferreds.
Right.
So I do agree with you. I think MetaPlanet is more geared up over the next couple of years to grow faster, just inherently with its market cap being much smaller than Strategies. I kind of look at it this way: is like in and denomination of like Bitcoin treasury companies, Strategy is the Bitcoin of the treasury companies, and MetaPlanet is like the second best long term. That's kind of just how I'm wearing the Strategy jacket for a reason. But I think down the line, there's just so much we haven't considered yet. Like, and Strategy really does have a true monopoly on the Bitcoin space, and just since the stretch issuance, they bought 21,000 Bitcoin, right? That's bigger than MetaPlanet's whole stack. When it's, I don't know how long it's going to be until most of the Bitcoin over the counter is all bought up and prices through the roof. But like, what happens when Strategy's mode is 1 million Bitcoin bigger than the next biggest company? And you're going to go put stuff, into retirement accounts, or you got the average Joe is trying to have some Bitcoin exposure. You've got Strategy that's got 1 million plus coins giving you 10%, 10% yield versus a MetaPlanet. Do you put more into a MetaPlanet because they're not as over collateralized and they're offering like a 12% as opposed? So that's going to be very interesting to see like what's the ratio of safety in like one company that's 50-1 over collateralized versus another that's 10-1 over collateralized but has slightly higher yield.
Yeah, I mean, I think MetaPlanet's like in their paperwork has said no higher yield than 6%.
Yeah.
So that's the max yield that they're going to do, and then 25% versus of their NAV.
Okay.
So so that's what so that I guess it was another 555 or whatever it was, is 25% of their overall NAV at this point.
Gotcha.
I think it's interesting that we're all just having this conversation about like what we're debating, like what's the better Bitcoin standard, when like in reality we're all going to win, because you just want to be off zero and off the fiat standard. And I think that's the whole point of this, right? Is that like it's probably over a lot of people's heads, but we can kind of transition to like orange pilling. I try to talk to everybody in the OR to get them to buy in and just help them understand, because I remember when I first didn't understand and how much Bitcoin's already transformed my life. I don't know if you've had any of those experiences yet with some of the people you work around.
It's funny, I saw that in the pre-discussion interview stuff, and I was like, well, I've actually got more people to buy Strategy than I have Bitcoin.
Interesting.
Oddly enough,
yeah,
like my cousins, I even the guy, like one of the guys at Fidelity, where I go deposit my checks because I have to go deposit checks into the Fidelity, personally. And we were sitting down one day. I was like, "So did you buy Strategy yet?" He's like, "Well, I'm not allowed to say that." He's like, I can't tell you that I bought that, but it might be a reasonable assumption that I might, And I'm like,
yeah, I might have.
Yeah.
If I could tell you, I might tell you that I did.
Yeah, I might tell you that I did buy some Strategy. Yes. And family members and friends. But yeah, no, my experience, like the one person I've really been trying to get like to do something with it is by my mom. And I'm like, Mom, like, look, like, I understand you don't understand it. You think it's like risky. But for your children's sake, it's going to be way better for you to have done this than, own bonds. But she's a boomer and set in her ways, and her husband and her are just probably, she says, "Oh yeah, I need to look into that." But she was interested when I told her about Stretch and Stretch.
Yeah, that's what I was just about to say.
I was like 10%, 9%. Like you get that, right? Like you're a boomer now.
Yeah,
like you get that.
Mom, the price doesn't move. $99 to $101. It never moves out of that range, but it gives you 9% a year. It gives you
It's a money market
basis points, a
right.
month.
Yeah, I think it's gonna be a big product. It'd be interesting to see. I think that story will repeat itself. Like people will now start onboarding people with that. Like, hey, do you have a high yield savings account? What does it pay? What if I told you I could double it, like with two button clicks? Like click, you're done.
You're done.
I think it's a pretty easy sell. It's going to be a pretty easy sell.
It's so powerful.
Yeah.
We talk about, like, Saylor talks about the entire like fixed income market being what, $140 trillion, something like that.
It's bigger than that.
trillion.
Bonds are 300 trillion, I think.
Bonds.
Yeah, I think if you Jesse Croesis's chart does a good job of showing the different capital markets, but the whole total of all the assets in the world is roughly 900 trillion at today's valuation, and I think fixed income's above 400, 500 trillion of that.
It's insane. Yeah. I mean, like it's basically infinity, right? Like, I mean, you might as well say, whenever somebody tells me like, oh, a billionaire, like, what can a billionaire buy? Well, to me, it's infinity, right? Yeah. Like, He has so much money that I can't imagine having that much money ever in my entire life.
When the denominator is denominated in dollars and they just print an infinite amount of it, it really is infinity.
It is infinite. Right.
So I think that's the important part. I try to tell everybody, like, you're working for something that they just go overnight and print. You know, they add another zero, and that's what you're storing your wealth in.
The paper standard.
Yeah.
The paper standard.
That's right. Yeah. You don't want a paper standard.
Yeah.
Yeah.
I haven't heard it put that way, but yeah.
Pick leaves off a tree and go into a grocery store and try and spend them.
Yeah.
That's a good point. Yeah. I like that analogy.
Someone brought up something. They were trying to counter Stretch. Like no one will buy that. They love FDIC insurance. I'm like, so who backs FDIC insurance? Like, if you look at it, it's like backed by the full faith and credit of the U.S. government. It's like,
right.
All right. This is a perfect time to drop this. Pure Rochard on X posted this a couple days ago, and I had to bring this up on this one because I knew we were eventually going to get into something. He said the Federal Reserve's got a 0% fractional reserve banking that yields 4.5%. Stretch is 600% full reserved, yielding 9.5%. Sailor is outperforming Jerome Powell.
Yeah. So, yeah, I mean, they will outperform
and all these preferreds
on Earth.
Every company that is able to get to preferreds, like MetaPlanet's about to do, is going to have the same kind of numbers. Like, it seems too good to be true, but it's not.
And I think that's where we like another place to like sort of end up is going to be. There's only going to be room for probably one more.
Yeah.
There's not going to be room for many more preferred companies that can do preferreds. So
yeah,
that's why I think it's so important for MetaPlanet to be the second one. And then is there room for one in Europe, or are they going to get to Europe first?
That's a good question.
Because I think all the European companies are really taking on debt to do this. They're taking on convertibles. So they're not going to be able to collateralize their fixed income products with their Bitcoin because they already have it promised in debt, convertible bonds.
It's almost like, I'm going to make up a term now. It's World War B. Like, America's coming from the West with strategy, and then Japan. They're coming from Japan with MetaPlanet, trying to get who's going to conquer Europe with their preferreds first.
Yeah, absolutely.
I like that, Chris. That's good.
World War B. But what's interesting is, so we talked about the market size between the U.S. and Japan. Like, as an American investor, I'd have to think about it. I don't really have a need for a 6% bond in Japan, right? I don't see a lot of rotation that way. So it's going to be dependent on how much of their market can they capture, which I think is probably pretty high.
It's the fifth largest stock market, fourth largest stock market in the world, I guess, right? Yeah. So there's a lot to capture there, it seems.
Yeah.
And then let's talk about the U.S. stock market for a second, right? Like, none of these other companies are going to be able to like compete, like Strive or 21 or Nakamoto. None of them are going to be able to like offer preferreds and compete with Strategy.
Not in any scale, even if they get there.
Zero chance.
Yeah.
That's as far as I look at it. So,
and then why would you, if they did, let's say that 3-4 other ones managed to do it, why would you rotate to that? Or why would you onboard into that? I don't know that you would.
Maybe if it was like 3% higher, maybe.
But then you get in that, it's risk adjusted, right? You're accepting a much higher risk.
Exactly.
For that.
I think we're getting at
people
the point,
will do.
Like, even if they do get to that point, there's brand name recognition, right?
Yep.
So like Strategy is like the Coca-Cola of the space, and maybe like MetaPlanet becomes the Pepsi. Like, you're not going to go put your retirement account in like the Kroger brand of Dr. Pepper to get your fixed income yield.
Yeah.
Like,
right.
Walmart, Dr. B or something.
Yeah, that's right. Yeah, exactly. Instead of just, why would you, when Strategy and MetaPlanet are, 10x and above over collateralized, they've got a documented track record of being in the space and doing it the right way. And you've got two leaders in Simon and Saylor that you can trust your money with.
Yeah, and I think that's another important thing to talk about is execution, right? Dylan and Simon, like, I mean, these guys are no joke. Saylor and Lafong, like, I mean, incredible leadership.
Yeah.
I think people can debate all day long which one's better, which one's going to perform. I think short term, you probably are going to get more growth out of MetaPlanet. Long term, like, no doubt that Strategy is unparalleled. There is nothing that anybody can do to match what they're doing. And I think, Chris, you and I have talked about the horsepower, stuff. And the engine for Strategy is much bigger. It's a 457 versus a smaller cubic block engine. I'm not a car guy, so that
I just pretend to be. I stayed at Holiday Inn Express.
But like long term, I think you can get a lot of growth out of
sure.
MetaPlanet. But I'm there's no chance that I'm going to buy something different than either one of these. And the one thing I think that's important to talk about with MetaPlanet is the MNAV volatility, right? Like the MNAV volatility is extremely important. And I think, going back to the earnings, meeting with Strategy, saying they're not going to do an at the money sale below 2.5 and only do it whatever partially between 2.5 and 4 and above 4. And then, with MetaPlanet, you're looking at a 7 versus a 3 MNAV. Volatility. I think their preferreds could actually increase that
channel, basically.
That channel, the
NAV
differential.
Yeah.
Like what was it? Like with it, there's a Japanese person, Hoyoku. Do you guys follow her at all?
I've seen some of their posts. Yeah,
she really is a like math. Some of these people are just math geniuses, and she has that 3-dimensional graph where you look at a 6% interest rate and a 30% CAGR on Bitcoin, and it's roughly a 23% MNAV or 23 MNAV for every purchase that you're making with that. So it's incredible when you really think about the applied mathematics or force behind it.
Yeah, I think another last key point, maybe, and we'll see what else we want to transition to. But Japan versus the U.S. interest rate markets are different too, and that we're politically driving a rate cut. I think is coming in the future at some point. And I don't know if Japan. I don't think they obviously don't have the political pressure, but they're seemingly going to move the other direction. So how does that play into the preferred? So it'll be interesting to see how they. Watching both of these kind of do this dance around what the interest rates do.
Yeah, you're saying Japan's going to lower their interest rates?
I think they're probably going to raise them, right? They've been raising them. Yeah.
Right. Okay. Right.
Versus where we're just politically beating the drum to lower them by any means necessary, which is
firepower.
Yeah.
Right.
But
gosh, I mean, if we could get some. But so going back, like I think that MNAV volatility. If you look at Adam Back. He's using that, and this is where I plan to use it also, to increase your amount of shares that you own. So you sell it at MNAV of 7, 10, 15, 20, whatever that looks like, and then you just sit there and wait for it, and it drifts back down to a 3.53 MNAV. You could buy it back, expand your numbers of shares.
You could automate that with limit orders. Yeah.
What's that?
You could almost automate that.
Yeah.
We're talking over each other.
That's okay.
Sorry.
What'd you say?
It's like you're using it as like your signal, your market indicator.
100%. Yeah, not price. Price per share is irrelevant. It's all about where is it trading at MNAV, and then that's a pretty nice gift to have.
Right. Yeah. It's a function of the transparency of these companies, right?
Yeah, and then if Strategy allows it to shoot up to 4 or 5 MNAV, you could do similarly, right? That's been the tough part about Strategy has been they don't allow it to expand enough to like feel comfortable trading the MNAV. Right.
Yeah, I think it might be a little bit different here with Saylor starting to let it expand, and I think Dan and some of the other True North guys do a good job of explaining like how we need the volatility back, and I think we're due for a very interesting next 6 to 12 months.
I think Strategy.
I agree.
The way I simplify it in my mind is they were manufacturing vol by being mysterious and like you don't know what their next move is, to where they almost got too mysterious to where no one really knew what was going on. I mean, you knew what was going on, but it almost got too unclear of what was going on. So then the market just didn't kind of froze, paralyzed by decision, trying to figure out what to do. So I think the earnings call did a good job of trying to reinforce that direction they're going to go. we'll see how
And
it plays
seems
out.
like they're listening to people, right? They're like
Yeah.
they're trying to figure out, okay, what's everybody thinking about us at this point?
Yeah.
Well, I think even the fact that they let all those guys on at the end, the digital transformation of investor relations, and they had Lynn Alden and Preston Pish and Punter Jeff and all those guys on there to talk at the end and ask legitimate questions, I think is a testament to how transparent the company is, you know?
Mhm.
Yeah.
Yeah, and I don't care about the proof of reserve. Like that stuff is just
No,
inconsequential at this
I
point.
think so too.
He's given that question's been asked how many times now, you know, and I feel like Saylor gave a great answer the first time. It's like he's able to do things by people not knowing. Like, look at those 80,000 coins that were sold by Galaxy Digital and how that moved the market very quickly and, like, you know, all sold in one bunch. Like, that's a great example of why Saylor doesn't want to have proof of reserves, especially like he talked about reshuffling their own wallets, right? He's got 620,000 Bitcoin. Of course, he's going to reshuffle it around to certain wallets to make it, you know, safer and more secure. Like, what would that do to the market if somebody thought Strategy was selling their Bitcoin at some point in time?
Yeah. And with Twitter nowadays, it could be some random anon account that's tracking one of his wallets, notices a change. It could even be a bot, makes a tweet, and it goes, the algorithm sends it viral and like has all of these unintended consequences. It just doesn't seem like it's worth the risk. You either trust that they are doing what they say or you don't. Them posting it doesn't really change my opinion, but
Yeah, and they were the first ones to start doing it too, right? Like,
yeah,
you know, somebody else has got to have some sort of like differentiating factor.
for sure.
Uh, you know, and I, quite frankly, this comes from 21. It seems like.
Yeah. That's
Yeah,
a whole other discussion.
Malers,
Right.
yeah.
We could do a whole episode on that. But yeah,
Right.
that does seem like where a lot of the friction and not aggression, but
He's upset about the strike ticker.
yeah. Well, Pomp just took the BRR ticker, which was his other, you know, metric that he made up.
Oh, is it?
Air quotes, yeah. It's like,
It's
yeah, we
funny.
invented Bitcoin rate of return. It's like, you didn't really. You just kind of gave it a funny name that people
Or-
already were using. Well, that's
Yeah.
Pomp's new ticker for his company. He changed it.
Interesting.
Well, Ben, I got to ask you this. So I think one of the interesting things, there's so many different like people and their timeline in medicine. You know, you've got like the med student or the pre-med, then you've got the resident, and then you've got the attending. And obviously those incomes are very, very different. And hoping that people find Bitcoin earlier in their career. If you were able to like talk to yourself and Bitcoin was around like at its present time now, and you were like a resident, what's something you would want to tell yourself, you know, both A, for medicine, and B, for like how to start saving?
Well, you know, I don't really think I knew how to be a saver as a resident. Like I felt like I was expected to spend everything and never save, right? Like, I mean, that's, I don't know, like how you guys felt. Like I was like getting what, $50,000 a year as a resident. But I could have saved something probably.
Yeah.
And then, you know, I had these life insurance people come and trying to sell me whole life insurance or whatever it
Yeah.
was, and I never did any of that. I didn't have any good advice as far as investing goes. But if I could tell, you know, younger Ben, you know, put everything you can into it, buy as much as you can. Shoot, at that point, you know, that was before Bitcoin was even a thing, but you know, when I was a resident, but certainly like is, you know, if you can afford it, like just start saving in Bitcoin. You know, there's no reason not to. You don't have to take risk. Like I get that like people view what I'm doing as riskier, like being all in Strategy and MetaPlanet and trading options. I don't view it as risky anymore because I feel like I've studied enough about it. But you know, you want to talk about never having to work again. You know, the earlier the better. I like medicine. I don't know if I would do it again. I'd probably just like figure out how do I get a big enough capital stack and start trading and living off the money that I have, as opposed to going 14 years of school. Would you guys go to med school again?
Yeah, it's hard in hindsight. I think me and Adam both have a similar view. I'll let Adam speak for his part of it, but I found my work really fulfilling. I think it sounds like what you've said too, and it's a really great way to make that income. My goal right now is just to multiply that and like, you know, keep that economic value stored, which is why we ended up being in Bitcoin. And then like for lack of a better term, leveraging that technology through the treasury companies like Strategy and MetaPlanet. But fulfillment for me would be just like working when I want to, and like just really scaling back and having that as much an abundance of time with my family and like my kids as they grow up. But I don't see myself walking away from medicine completely, unless something, AI just all of a sudden took every anesthesia job on the planet. But
Well, they won't be
if,
able to stick a laryngoscope down the throat.
there's a robotic one now, apparently.
What do you mean? There's like a robot that does it?
There's like a robotic, like you do it remotely. Was that in our group chat with work, Adam?
Yeah, somebody mentioned that. So the counter argument I always make to that is like, if they think AI is going to take over anesthesia, you can plug in like every formula, right? And like, okay, you push meds, and then like the patient's supposed to be asleep or whatever. Or like, let's say the patient's hypotensive during surgery, and the answer is like to give a dose of phenylephrine, which is a blood pressure medicine to raise your blood pressure. Like, you plug that all in the formula, and the next step is ephedrine, the next step is vasopressin, the next step is norepinephrine, right? You go down this whole algorithm, and it's like, what if I just told you that IV was infiltrated?
Yeah.
Like, AI can't do that. It's not going to go check under the drapes and like make sure the arm's not puffing up. And oh, by the way, now you've just pushed a bunch of norepinephrine and vasopressin on an extremity that's a blown IV. Like, it's just these procedural type fields I don't think are going to be as
They're
susceptible.
going to be very late to being replaced, I think.
Yeah, I mean, I do believe my skill set will probably be like one of the last to be replaced. But
yeah, oh, absolutely. Yours is entirely visual and cosmetic, right? Like,
yeah,
there's an art there.
Yeah, it's interesting. Certainly, they're coming for general medicine, jobs, which are all algorithm. Yeah, it'll be interesting to see when those of us that actually do some sort of procedure and get replaced.
Yeah. Is there any AI tools that plastics and cosmetic people are using, like for the, when you give people a pre-image of what you think that the reconstruction is going to look like, or anything like that?
Yeah, I mean, it's not really, it's not an AI tool, but we do morphing software for rhinoplasties. So we try to show what it would look like to take the bump down, lift the tip, tighten the tip, all that sort of stuff.
Gotcha. There's not really any AI on the boots on the ground for anesthesia yet, but I'm sure it's coming.
Well, and everybody, radiology, like all I see is our article after article saying it's diagnosing things quicker and faster than radiologists can.
Yeah.
Right. I mean, that's the point. There's nothing procedural there, right? Like you're not doing anything like manipulating anything. It's just like looking at a scan. I think that's the safer things are going to be the ones that are procedural based.
Yeah.
Where like, think how many variables there are in the OR.
Yeah.
It's probably the hundreds of thousands.
Right. Exactly.
It'll be interesting. I'm a big believer in AI is going to change the economy at large, but healthcare, like we talked about, is still so heavily procedurally focused that I think a lot of it is shielded for a while. But it'll be interesting to see how the rest of my life is morphed and changed by that.
Well, we just haven't seen anything like it. I know, Chris, you and I are both big fans of Jordy Visor and the Pump podcast, but I think in the most recent one, they talked about like the marginal cost of production going close to zero, right? We just haven't, you can't imagine like millions of these AI working for basically nothing and what that will do to revenue. And so then you imagine what kind of revenue that's generated. Where is that capital going to go?
Well, so what would AI be working for then? They're going to be working for like some sort of compensation?
Well, I think there will be companies that own like the AI, right? And it may become more of a monopoly, but
I see.
And then, then you wonder, okay, well, all this revenue is coming in where they don't have to necessarily pay other than for the, the input being the electricity cost and the power that you have to do to run these AI. You're generating all this revenue. It's funny. It's like all roads lead to Bitcoin, right? Like that's where all the money and the wealth is going to be stored. And I think Punter Jeff does a great job of explaining this. It's like, that is the true digital transformation of the whole space. It's like, yes, AI is coming. That's going to change everything. But like the wealth is where you want to think about what that go. You want to skate to where the puck is going. And that's Bitcoin.
Right. Absolutely.
I think so. I think we all agree on that front.
Yeah.
So I got to find a way to tie it back into. Chris tried to talk about AI too much. This is a Bitcoin podcast.
Well, I mean, so AI, like actually this is something interesting, like my office and I have been talking about. We want to start doing some more social media on me being in the Bitcoin space as opposed to just an aesthetic cosmetic surgeon. And what's it going to look like, right? So like I say to my AI bot, I want a facelift, okay? And that AI bot goes out there, does the vetting, the research, contacts the office,
Right.
has whatever discussion with the office or the AI from the office, books the consultation. The medium of exchange has to be in Bitcoin, or I guess it could be in US dollars initially, but like ultimately long term, then books the surgery. Oh, you have your consultation. Then they go back, they talk to the office, they book the surgery, the date, everything's completely taken care of.
Automated. Yeah.
Yeah, automated. And I think that's where at least the aesthetics industry is headed, for sure.
Yeah,
I think about like the hospital me and Adam work. Like if we had someone that was forward thinking and with plugged in AI to like all of our scheduling issues and all of our resource allocation issues, like how much better
Oh
the
my
day to
God,
day would
having
be.
an AI scheduler would be something. We have like 3 schedulers right now, and them trying to plan, like they'll schedule it like one site and then expect there to be like no turnover between surgical cases. And then all of a sudden you have to like teleport for a case that's 30 minutes away with like
Right.
a 15-minute turnover time.
I don't think AIs like LLMs as they are now could do it because it is a very complex thing with people's preferences and like where they have privileges and whatnot. But I think we're close to like that being an easy ability for an AI agent, basically.
Yeah, I think the medicine world that we are practicing in right now will look vastly different in 10 years, which is like the residents and fellows coming out will be practicing in a very different environment, which will be interesting.
Yeah, I mean, they say like 80% of jobs are going to go away within the next 10 years. Not doctor jobs necessarily, just all jobs, right? Like,
Yeah.
what are people going to do to make money and live?
That's the point I've brought on this podcast a couple times. Is like I jokingly say like docs don't necessarily, we need Bitcoin, but we don't need it as much as other people. Like we fortunately have a very secure job and we're going to have high income potential. It's like the nurses and some of the other techs that we work with. When I'm talking about this in the OR, I'm always like the guy in the back, trying to orange pill people. I'm like, you guys don't understand how badly you're going to need this. Think about, all those other jobs. Think about like the Uber drivers. Like what are they going to do when robotaxis and some of this other AI takes the job, right? And then you can't make any. They're going to continue printing, right? So not only that, but you're being debased, and you suffer through inflation just like all of us.
Yeah, 100%. Yeah, I mean, if you don't have something to like invest and live off of, it's going to be really tough.
Yeah, it's a big unknown. Like it's moving faster and faster. I don't know. Like we talk about trying to keep up with all the information. Like I don't know, Ben. Do you have a curated like list of people on X you follow, or like how do you try to triage all the information that's coming out day to day?
Yeah, I mean, the curated list is my following.
Okay.
And I mean, that's basically like what I pay attention to. I do try and keep that curated, as you said, to not try and like have superfluous things coming in that I think are like, I mean, God candles coming soon, like, I mean, that's all that you hear back and forth. It's like, Jesus,
who are you
man,
talking about?
man. Like, yeah, right. Yeah, we don't, yeah, exactly. Who are we talking about? But it's like, wow, like it's just like this like cheerleader group as opposed to like real methodical, like, look, I think as physicians, we don't get enough credit for being able to understand what the finance world is trying to tell us, right? Like,
Yeah.
Math was my favorite subject my entire life growing up too. Like I was really, 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 really good at math. I'm good. We are good at looking at charts. We have to extrapolate data out of charts as physicians. On our MCATs. Like this is what we're sort of told
trained
to
for
do.
almost. Yeah.
Yeah, trained for. So it's not much different for us to look at a chart and like a financial chart and try and pull things out. So I think we're not given enough credit for our ability to think for ourselves. I don't use a financial advisor. It doesn't sound like either one of you guys use a financial advisor.
No.
Like I said, about 5 years ago, I was like, I got to take control of my future. I can't rely on somebody who's telling me I'm going to grow you at 6 to 7% per year, and you're going to pay me 1% per year to manage your portfolio, and like ever figure out like I'm going to ever retire. or be able to retire, it's sort of a joke.
Yeah.
Yeah.
No one cares about your money more than you do.
Right.
I think it's the biggest thing. I always talk to when I have like a med student or a resident, I really try to engage them and get them to start kind of educating themselves and kind of figuring out. There's a book called the White Coat Investor, which is I think Chris and I both have read that in residency, and that was a big thing that started my kind of personal finance journey, and then got me into, now I look at that through like obviously a Bitcoin lens. And then the other big thing is like you said, doctors don't get enough credit, but I think sometimes they don't give enough credit to themselves. Right. A lot of people are like, oh, this is finance. That's too complicated for me. And what you don't realize is that like by becoming a physician and, drinking out of a fire hose through medical school and residency and working 80 hours a week all the time, like you've already established that you are proof of work. So you can do this. You can teach yourself this. And I'd argue that's the greatest investment return you'll ever see is the investment in yourself and starting to understand finances and really taking charge of your own accounting.
Yeah, I mean, when I opened my business and I was like, okay, I'm going to take on debt and do all this stuff, I was like, well, I'm betting on myself. There's nothing more that I can bet on than myself, or in my opinion, I can't bet on anything better than myself.
Absolutely.
And if I fail, there's only one person to blame at that point. So I'm all about accountability. Accountability and responsibility are a big thing for all of us as physicians, right? It doesn't matter what, and in my OR, I think you guys were, talking about how much do you try and strike up Bitcoin conversations? Well, I talk about Bitcoin every day in my OR. Now my anesthesiologist is not a Bitcoiner at all. In fact, he's totally TradFi, like anti-Bitcoin. I still bring it up. I still talk about it all the time. Now he follows me on X a little bit and likes some of my stuff that I'm saying out there, but he doesn't own a single SAT. But I tell everybody in there, the nurses and everybody included, you need this. This is something you need. I can't tell you how important this is. In fact, my girlfriend, I got her completely out of all these stupid ETFs and index funds in the Strategy and MetaPlanet, and other people who weren't understanding it, maybe hearing that what she was doing, they thought it was ludicrous. She was crazy. You're betting on these companies that everybody else is saying is highly speculative. And I said, in 10 years, you're going to be better off than anybody else out there.
Yeah.
Yes. Let your assets work for you.
People do think you're kind of crazy. It's weird to have that dichotomy. Like the people that get it, you can talk all day about it, and the people that are outside the bubble, just like my brother, we were talking about him a little before he hit record. He texted me a few months ago when I got more active on Next. He's like, "Did you get hacked? What are you talking about?" I'm like, "No, this isn't me. I'm just talking about what I care about." And then today I found out, he's like, "Yeah, one of my buddies from high school followed you, I guess, randomly from high school, and I didn't ever make a new account." And he's the one that sent it to me and said, "Is your brother going crazy or what's going on?"
Yeah.
No, I'm just. And then I told him I got to leave the family function to go film a podcast. He goes, "Is it a Bitcoin podcast?" I'm like, "Well, duh. Of course it is."
Of course, man. You guys don't let me talk about it at the dinner table. I got to talk about it somewhere.
Yeah.
Exactly. I don't get to talk about it anywhere. Nobody wants to talk about it with me.
Yeah.
Anywhere.
Well, I think it's just that people don't want to talk about finances, right? But that's what dug us into this problem in the first place, right? Getting off the gold standard in 1970, nobody talks about the 50 years of atrocious fiat debasement that we've all gone through, and we see all the Jack Mallers does a really good job of that in explaining where we are today, right? There's a chart that was recently published. I'm sure both of you guys have probably seen it. That's the average 30-year-old for the 30-year-old population. Only 12% of those individuals are both married and own a house. Right. Compared to 1980, that was 60%.
It's going straight down essentially.
Yeah. Absolutely. People wonder why people aren't having kids or not owning homes. It's all a testament to the money being broken.
Yeah.
That's why this stuff matters.
I saw an advertisement from the 1950s or maybe the early 60s, and it was a flight can compare today, and the flight was these giant seats, and they're sitting down and they're being served scotch and filet mignons, and then today it's a bag of peanuts and a water. in a tiny little
Not
seat
even a
that
full
you barely
water.
fit in. Right, not even a full water. Yeah, they got to pour it in a tiny little cup.
Yeah.
So yeah, quality of life just continues to go down as time goes on.
Yep.
Yeah, I think we're on the right boat. We have the orange
so.
life raft.
100%.
All right, we're over an hour. If anybody's watching, hopefully they're still watching till the end. But if they're here around still, let's give them some closing thoughts. Anybody have anything pressing that we haven't talked about? What do you want to leave people with?
Then I guess I'll just ask you, like, what do you think of a Bitcoin fellowship? Like, people, that's kind of what we talked about. Like, we don't want to tell people not to do a fellowship year, but it's this whole idea of like educating yourself about your personal finances for a year is the greatest investment return you'll have, especially in like the Bitcoin space.
Mhm.
Is there any thoughts that you have? It sounds like you've tried to orange pill a bunch of people or get them in this.
Yeah, I think I spent 5 years of my life like studying like money, finance, economics, not just Bitcoin, because you can understand Bitcoin, and that's great. Like, and that's probably the number one most important thing you can do. But understanding how it fits in the system that we're given is important, because you can use that system to your advantage, right? Like Roth money, the single most powerful thing, like for generational wealth and transfer of wealth to future generations, is Roth. There's nothing more powerful. You can't get around that. And then understanding how to maybe like get that bucket filled up faster, by the mechanisms that are available to us, like the defined benefit plans, in particular, or backdoor Roths, right? Like mega backdoor Roths. Those are ways that small business owners can really like take advantage of those situations, in addition to just being simply in Bitcoin.
Chris, you have anything you want to add to that?
Yeah, I mean, I think this has been a great discussion. Appreciate you, Ben, for coming on. Keep studying Bitcoin. I don't have a lot of closing thoughts. We touched on a lot of stuff. It's been a great discussion.
Yeah, I always
Study
enjoy
Bitcoin. Yeah.
It's fun. I wish we could be in an OR together because I feel like that day would just be a blast.
Well,
Between
come on
like
out.
those
We'll do
poor
it all
nurses,
together.
those poor nurses in techs are gonna be like, these guys are both freaking crazy, and we're just sitting there in our own world, just like, you guys don't get it, like this is why, trying to explain and trying to give them the good word. Send your anesthesiologist our way. He's one of us. We got to fix him.
Yeah, exactly.
But I'd be interested. Go ahead, Chris.
I would say, Ben, where can people find you for either cosmetic surgery stuff if they're in Atlanta, or on X for Bitcoin stuff? Like, where do you want to point people?
Yeah, so interestingly enough, like I started my X account, and I don't promote my cosmetic procedures at all. I think you guys sort of see that. I didn't really want to mix the two, but that's Dr. Benjamin Stong, MD, and then my business is at Kalos Plastic Surgery, or kalosplasticsurgery.com. If you want to find our facelifts and rhinoplasties, those are world class, top notch.
Very cool. I'll definitely link those in the all the descriptions wherever we post this.
Cool.
Very cool.
We're gonna have to cycle back a couple months or a year from now. I'm interested to see those first couple people who do start paying in Bitcoin. That's gonna be a fun consult for you, I think.
Yeah, it was actually more like, I was like, oh, that's way cooler than getting a facelift consult.
Yeah, absolutely. You just have a lot to talk about,
Yeah, very cool.
Yeah.
Well, Ben, thanks again for coming on. We'll do it again sometime.
Yeah.
And looking forward to keeping up on X and all the stuff we go back and forth about.
Yeah, man. Thank you. Thanks for having me. I appreciate it. It's
very cool. Talk. Well, you guys enjoy the rest of your weekend. We're recording on Sunday. We'll release this probably on Monday. And share it, like, subscribe, all the grifty things people say.
Cool. All right. You guys have a good Sunday evening.